We got some huge news for trade desk stock investors as the company recently reported quarterly financial results that sent the stock price crashing and also held a conference call with Wall Street analysts and revealed critical insights that all investors should know about. So, in this video, I'm going to share with you those details of what the trade desk's management team had to say about their recent performance and what it could mean for trade desk stock investors. Let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So, Trade Desk founder and CEO Jeff Green talked about how in the second quarter, a record amount of spending was influenced by retail data both on our platform and on the Walmart demand side platform as more shopper marketing budgets flow into programmatic advertising. So, what this means for investors is more and more marketers are looking to data to measure return on ad spending. That's really what makes digital advertising more attractive. That's why marketers are spending more money on digital advertising categories like search and social media because they can measure how many people clicked on the advertisement or how many people saw the advertisement, how many people purchased something after seeing the advertisement, right? And now with the data integration from companies like Walmart, more data can be measured, such as what were your sales at Walmart after you showed a advertisement on a connected TV platform, right? Whereas previously, you may not have been able to capture that kind of data because it's not direct, right? It's not a click and online purchase, but it's more of a view from an advertisement on, let's say, the Roku platform and then a purchase later on at Walmart, you can make that connection because of all the data, the user data that's connected to a person's Roku account, and then the name and last name and area that person lives, and then if they go and make a purchase at Walmart the day after, a certain product was now included in their overall part, where previously. That wasn't a regular purchase that was included in their shopping cart. So, in these ways, spending from consumers is becoming more and more measurable. And that's partly what has people and businesses going to the trade desk for that measurable. So, I've been talking about this with several of the companies I'm following in this category. And the global advertising industry is a $1 trillion industry today. $1 trillion industry. So it's one of the biggest industries in existence right now. And this is the category that companies like Alphabet, Meta Platforms, Reddit, Pinterest, Roku, uh, and I could go on and on. All these companies that work in this category that generate most of their revenue from marketers looking to advertise. And I've also said that this is a category I don't expect will ever decline in any 10-year period because so much of our spending, so much of consumer spending is based off of advertising that it's so critical for nearly every business that this figure I expect will continue increasing for all of eternity. At the very least, increasing at the rate of nominal GDP growth for all of eternity, if not increasing as a percentage of overall GDP as more and more of our spending goes towards these categories. And also, as advertising improves because of the shift to digital advertising. And if you're doing digital advertising, there's a lot of learning that can happen in measurability, in targeting, in all of that, which can enhance the return on advertising spending. And if you're getting a better return on advertising spending as a percentage of your overall budget, you're going to increase advertising. And so, for those reasons, I expect this industry will continue soaring for all of eternity. And that's great news for trade desk stock investors, as this is a tailwind the company will benefit from. By the way, this document I'm reading from is the Trade Desk's most recent earnings call with Wall Street analysts. I've made this highlighted document available to all my channel members, and you can join my channel for less than $5 a month. See the link in the description for all the benefits you get for joining our channel. This is just one of the many benefits we offer. So the Trade Desk is not being left out or left behind from artificial intelligence. The company saying that quality AI requires quality data, and to trust AI-driven buying long-term requires objectivity, right? And that's something that the Trade Desk has been trying to push, this thought of objectivity in the advertising inventory industry, right? And its main attack is companies like Meta Platforms and Alphabet, which Trade Desk says are not objective because they own all of that inventory that they're trying to sell buyers of that inventory. Okay, so they're heavily biased about that advertising inventory because they want to sell all of the inventory that they make available, and they also want to capture the highest price for all of that inventory that's available. So they're saying that a black box that just sells their owned and operated media will struggle far beyond what ad networks have struggled with for decades. And so the Trade Desk doesn't have that conflict of interest. They only work with the buyers of advertising inventory. And so they don't have that two-sided bias where they're also trying to capture the highest average selling price, as well as trying to encourage buyers of inventory to use the Trade Desk for their programmatic purchases. So database decisioning and measurement is at the core of what the Trade Desk offers. Database decisioning and measurement is at the core. And that's really critical for advertisers, is to decide where to spend your dollars to get the best return on ad spending, and then to be able to measure the results of that advertising campaign, and that will help you make the next decision, right? Let's say you decide for this holiday season to make your purchase of advertising across these several platforms, and you need to see the results of that to then make your decision. Let's say you realized that you got a really good return on advertising spending this holiday season on the areas you spent money on. Okay, you evaluate that data based on what the Trade Desk provides you. In the next holiday season, you can make a decision based on the information you got from the current holiday season and either increase or decrease your spending or change some of the spending, change who you're targeting, the type of customers, etc. It'll all help a marketer target more precisely and get better return on that advertising spending. So a lot of tailwinds here, a lot of moves the Trade Desk is making to make itself more attractive, and a lot of long-term factors here that could benefit investors in the Trade Desk stock.
Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.